Well, hello guys, glad to have you on board again today. Straight to the point, what the hell is happening? Are we in the end of the nascent bull market? Oh, the bear's right and we're all going to die. Well, that's not what we pay attention to. We look at flow trading in these things. Same old story in here. If you want to forecast the market for 1 to 2 years ahead, this is certainly not in these shorter time frames that you're going to have information related to this. The only fucking thing you're going to get in these shorter time frames is volatility, which means we're in the market maker's realm. Don't be dumb enough to fall for the narratives. Just do it straightforward, figure out where the low risk strategies time frame is. We've always said this is weekly, so the flows will likely occur in H1 time frame. This is where the market makers will have to figure out its clients' orders, possibly in the sense of the low risk strategy in the direction. Though normally clients and institutions should be buying more than selling, and the market maker has to address volatility according to this. Though that's not a purely future forecasting science, otherwise we would all be billionaires. The thing is that, well, no one predicts the future, we just try to risk limit. Though flow trading, like we've always said, is you need to embrace uncertainty more than trying to fight against it, because that's the way it is. More importantly, over the latest few years, we've seen the absolute master emergence of absolutely wrecking retail traders type of structures. I mean, these kinds of things, okay, expanding wedge structures in which trend lines tend to diverge more and more over time. Their distance is increasing. Okay, these have always existed, but the thing is that I've rarely seen so many of these that the latest couple of years, the latest four couple of years. So very, very, very dangerous market, trying to wrong foot everyone. Basically, in these structures, when you have the bear feeling, well, boy, the market just fucks you up. And when you're bull, well, boy, the market fucks you up as well. So this is just a washing machine of sentiment traders. I've always said, don't be dumb enough to fall for sentiment. Moreover, if you are trading on flow timeframes, market makers just play with those emotions, and you are stupid enough to fall down for this all the time. So please don't do it. Don't look at sentiment trading. It's just the stupidest thing to do when you got to flow trading. Okay, just a reminder in here. Still, what is the technical situation when we look at the charts themselves? We're still trading with that absolutely stupid area, which we've mentioned is technically very, 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 very shady, because in order to trigger the trading flow, we're going to have to break the previous high points in the futures market. The thing is that this upper shadow candle back then has never occurred into the cash market. Though we have two conflicting arguments, if you look at the cash market, we would say, well, in here we have, just look at it, okay? In here we would have one flow and we would be doing the second one. Basically in here the third range boundary has never validated, it's been broken up. So this means in here this is one flow and we would still be doing the second one. Though this is a conflicting algorithm to me, I normally don't follow flows in the cash market. I generally do it in the futures market. And in here we would have 1, 2, and we would still be doing the third. But still, we're gonna have to break the previous high point for this. So like I said, conflicting arguments in here. I see that there's significant divergence between the cash market and the futures market. Once again, I think this is nothing more than just the market makers fucking up with your brains. And in that perspective, try to make it easy on you guys. I always follow flow trading when it's in the side of the low risk. So I'd just like to remind it to you once again. I don't pay attention to bear trades in these kinds of contexts because I always favor the low risk. This is why I am more bullish than bearish, but I am not nearly like it is only going to go up. There's always risk taking, and if you take too much risk, the broker is going to take your money. So you have to do it smart and avoid being trapped down by the market maker's volatility so that you're forced to sell at the lows or buy at the highs. And of course, knowing that, well, you never can push out the stop losses, okay? So my current stop losses are going to be there. If the market maker succeeds getting out there, well, I'm fucked. That means I'm going to have to take my maximum loss, which is what the strategy doesn't allow me to go beyond. Otherwise, I'm taking extended amount of risk. And this is these areas in which basically it feels like, yeah, you know the future. Yeah, I know the market is going there, but I know it's going to rebound, so I'm not going to take my stop. No, it isn't. It just takes one time in which the market just goes absolutely nuts, and you will be fucked for a long time. So Never move your stop losses. If the market goes there, that means two things. Either you're wrong or you're wrong. That's just what it is. That means wrong in the sense that you probably should have bought lower and your stop losses would have been more appropriated, or the market is going in the wrong direction and you'd rather like to take that loss and move on to another trade. So that's the thing, okay? Second, last but not least, we have that expanded wedge structure. If we still haven't started the third flow, well, this is just no more than a consolidation, which is, once again, going with expanding wedge structure, which do nothing but maximizing the volatility and the uncertainty. Market makers playing with sentiments. So you rather like to be buying low, sell high in these structures, but of course, no one knows perfectly. I've been starting to buy in here, which means I'm underwater now, and this is where the market can take my stop loss. We'll see if it succeeds going there. If it doesn't, well, that's the same old story. In flow trading, when you go down, it's only for going up twice. It's one step backward, two step forward. If that's the case, well, if we're still in a bullish flow, if we're still trading the third flow, it will start by breaking the 4200, which still failed to do, and it will first of all go for the 1-to-1 ratio, meaning if we break the 4200 now, the next target is 4400. We've gone 4,000, 42, you get it, okay? That's really the way it is. So I don't know. All I know now is that the market makers are trying to maximize volatility, and we can clearly see that with these consolidative structures with expanding volatility over time. So the more time passes, the more retail traders get emotive, and of course that leads the market maker to try maximizing these profits by flushing just as many people as it can. In that perspective, if I have to be one of the victims, I will. The thing is that, of course, I'm not going to be stupid enough, and I think I have more than enough to support my prices, rising moving average, and the like. So I think I'm still safe. We'll see if it can succeed or not. Otherwise, that's just anything but a trade. I still have those trades in here at break even. Though if these ones get stopped, I'm going to lose most of my previous gains. But AKA, guys, I've taken a lot of gains already, okay? Though, remember, I am still going to make money out of this. It's just, well, I could do more if I am not stopped out. So we'll see if the market takes enough volatility to get me out of this game. And if that's the case, well, I'm going to have to switch my gear. Until then, I see absolutely no reason to. The market maker is maximizing volatility, so I'm just cooling down and maintaining my margins. I'm not adding to existing positions like stupid guy who say, well, I want more, and then buying each and every dip. No. Now the market makers has sent the message. I want to maximize volatility, so I would say good luck with that. I'll let you do it. The thing is that maximizing volatility has already brought us to the limitation. If we have a look at the H1 time frame reference, we're already trading at the lower Bollinger Band. So to be honest, I hardly think the market maker can do much more of this. It can work its way into the volatility boundary for a few days, but I doubt the market maker can take my stop loss. If it happens, I'll be happy to give it away. Like I said, I don't know the future. If the broker is smart enough to manage its way down to this area, I will take the loss. Otherwise, what I would like to mention is on the crypto sector as well, which we always follow in the same time frames. The thing is, in here, you would see an absolutely different picture. It feels like, well, the US has collapsed for whatever reason, and they feel like they're the only ones. Well, in here, we still have the same old thing. We've got a very, very first, tiny, but still, first flow, a massive, gigantic second flow. I've taken my profit last week in here when we retraded over the third range boundaries, which means I booked some massive gains in here. Like, I give you the rough estimate, it's more than 20% of the capital, which means, well, basically I can now straight up take 10 speculative losses and I will still be on a net gain for the year. So basically in here, good luck bears, I am still far from being down. So I would say, well, I don't know what that is. That could be the beginning of a third flow. I don't know. I mean, to be honest, it could be. So if that's the case, then I will have missed it as I haven't bought. I took my profits. So I don't know. All I could say is that, well, I look at Bitcoin, but I think Ethereum is where the game is actually being played. And same thing, we're below a massive resistance. That's the 4,200 of the S&P 500 on the equivalent. I've always said the money is flowing into Ethereum, certainly not Bitcoin. You should look at this one. instead. So in here, what do we see? Oh, expanding wedge structure and this same old stupid stuff. Okay, so once again, market makers will maximize volatility in here. Don't be too greedy. This guy could fall more than 10% if it wants to maximize the volatility once again. Pulling right back to a rising moving average in a rising context isn't going to make it bearish at all. I have put some cash in Ethereum back then below the 1500, and if it goes there, well, you know what I'm going to do. I'm going to buy for the third flow, and I'm going to buy with cash on top of it to increase my initial investment thesis. So basically, if the market ever goes there in Ethereum at 1400, I will buy with cash, which goes immediately into the long-term portfolio. I'm never going to sell these tokens. And last, on top of it, I will trigger some margin trades again, reinvesting my previous gains ahead of the third flow. Okay, so that's really the way it is. Simple as that. I see that the market makers want to maximize volatility, so I'm paying real attention not to oversize my positions. I reduce the position sizing. I widen the stop loss to be smart enough not to take on the red hit of being over emotional because you've had too bigger position sizing. And the retails does that. They get overexcited, so they take stupid positions with tight stop losses. Well, every professionals know this is exactly the opposite. Right now, I'm taking cautious position sizing. I know the volatility can expand at every minute and that all the dumps will fall down for it. So I'm not listening at all to the sentiment in YouTube, Twitter, whatever. Fuck these guys. Make it easy to me. In flow trading, I don't ever follow psychology. All I'm looking at is what the prices are doing. And what I see in here is maximized uncertainty and volatility. So the instant reaction to me is doing the opposite of falling for the narratives. I have my plan. I follow the low risk strategies. I know that no matter what happens, there are far more than 50-50 chances to go to the upside. And that is what I exploit. Prices should move higher if and only if you trade smart enough not to be gambled by the market makers who just does one thing, playing with volatility, and in order to maximize it, they play with your sentiment. So whatever is going to happen, I don't know. Either this is the biggest fucking trap that the S&P has given us, and it's going to retrace very violently and break the 4200 this time around. Option number two, the crypto market may follow through by a big, nasty 10% drawdown, and if Ethereum takes 10% in the face, gosh, I please you on the shit coins that have pumped for triple digits over the latest couple of weeks. So this is really the way it is. Volatility could increase. I don't know. I don't give a fuck. I don't pay attention. I am no longer margin trading in the crypto sector. So if it goes lower, that will be an opportunity for me to start doing it again. On the opposite hand, well, if the S&P 500 has just tricked the market into the stupidest volatile trade ever by just increasing volatility, expanding wedge structures, and then boom, we go 2 steps forward, on that front, we're going to get to the longer term time frame targets, which are the 4400. And if that's the thing, if that's where the flow is headed, well, right now, whoever gets stopped out because he's been taking too tight of a stop loss is just dumbly being stopped at the lows. So I don't want to be in that case. I cautiously handling my position now, not adding to existing positions. I would like to buy the dip, just like everybody. I've bought at higher prices. I bought in here. I bought the support. So I'm underwater now, and I wish I could add up positions just to be there and say, oh, look at that, folks. I bought the bottom. And no. I've added just one contract in here out of 2 existing contracts, which is nothing out of the ordinary for me, and I'm not going to add another position. If the market goes lower, I wish I could buy, but I won't be able to. My current stop loss is in here, and that's it. All right? You know everything. If I am stopped out, well, congratulations to the bears. You will have some time out to take the bulls narrative down the line. On the other hand, if you guys are wrong, 4400 is where we go next. That being said, it's more than enough for now. See you guys later. Trade safe. Don't overtrade. And please take the message. Professionals have listened to just that, to what happened recently with just one message. Cool down. Don't overtrade. Maintain healthy margins and try to have a stop loss that is as distant as possible. And wait for the market to deliver. Either now the stock market is in a trap mode and will go up following the crypto market, or the crypto market might have to follow through with another big burst of volatility that could lead to somehow 10% drops in Ethereums and the like. But the thing is, if you're dumb enough to say, well, now I know the crypto is going to drop like shit, and you sell, if the flow triggers, boy, we're not going to go down, we're not going to go just 10% up. Remember, the Ethereum is going for 2,400. So I've always said, be smart. If you sell now, you're going to have to buy yourself into a rising market with no liquidity. So be smart. Just don't try to forecast the future. Handle your risk and let the market decide. That's exactly what I do now. If I'm wrong, well, I know what I'm going to lose. If I am right, I don't know how much I will make, but I know I'll make much more than what I'm willing to lose. That's really the way it is. Bye, guys.